Hey everyone, in this video I'm going to talk about one Cathie Wood stock that I think is an excellent stock to buy here, down 87% off its high. And that Cathie Wood stock is Zoom Video Communication. It's down 87% off its high, and in this video I'll discuss why I think it's a good stock to buy and why you might regret missing out on it on these valuations. Starting with revenue. Look at the trailing 12-month revenue, and that might surprise you. Many people are under the assumption that since economies reopened and people return to work and return to in-person school, that Zoom experienced a decline in revenue. But that's not the case. Revenue for Zoom is still as elevated as it's ever been at 4.46 billion. It's the highest it's been. So revenue is still thriving for the company. But it's not all great news for Zoom. There was an impact from the economic reopening, and that's what I want to show you here. And so look at the company's operating profit margin quarterly, and you can see that there was a huge decrease initially from the economic reopening. This is where the company struggled. During lockdowns, when we were all learning and working from home, Zoom was able to easily generate revenue. People were flocking to buy its services. It didn't hardly have to do any effort, any work. It just made the sale. Nowadays, Zoom is working harder to make those sales. It had to increase its sales team, increase incentives, show demonstrations on why companies should buy its service. So it's not been as easy as it was during lockdowns when it was a no-brainer purchase for many enterprises. So that's where it's been hurt from the reopening, is that it's made it harder for the company to generate sales. Although that decrease has turned around. You could see in the most recent quarter, operating profit margin rebounded up to 15.6%. Now, there needs to be more evidence that there is an uptrend and not just a one-time boost here, but it is good news that the downtrend has been reversed and the company's returning to profitability, even if it is for just one quarter. However, the company doesn't need to grow at rapid scale in order to generate profitability. The business is not that type of business. It doesn't need to grow by leaps and bounds in order to generate profitability. Zoom was generating profits even before the outbreak, right? It wasn't, you could look back here, 2019, several quarters where Zoom was generating profitability. In fact, as a finance professor at a university, I've been using Zoom since 2018, 2019. I've been using it for my office hours. Sometimes I deliver lectures through Zoom. Definitely during the pandemic, lectures were delivered through Zoom, right? And so even now, sometimes there is cases, for instance, last semester I can remember there were days where it was way too hot on campus and the air conditioning system wasn't functioning properly, so the university thought it would be safer to deliver lectures over Zoom again. And so there's still instances where we're using Zoom and it just makes sense. It's a great tool to communicate, and that's likely to remain the case longer term. It's not going to be as popular as it was during the pandemic. That's understandable. It doesn't need to be as popular in order to make a good investment. Another reason why is look at the free cash flow here. It exploded during the pandemic, right? All the way up to 1.5 billion. It's not up to that level, but it's still generating over 1 billion in free cash flow and 1.1 billion in the most recent update, and the downtrend has turned around. So the difficulties from the economic reopening and people returning to in-person working and learning, it seems to be turning around. It seems to be hitting a inflection point and turning back upward, right? It's a little early to determine that conclusively, but the evidence suggests that it's starting, at least you can say. And the last reason why I'll give that you might regret not buying this Cathie Wood stock on the dip is because of the valuation. Zoom Video is trading at a forward price to earnings of just 16.3, near the lowest it's traded for going back to early 2022. And so you're getting this stock at a relatively cheap valuation, cheaper than the average stock in the S&P 500. And so you're getting a company generating good profits, good cash flow, and at a elevated level of revenue. And you've got a company that just spent a year or two demonstrating its product to millions and millions of users. So think of that now. It's got millions and millions of people that know how to use Zoom. And so those could turn into more and more clients, more and more revenue generating clients as time progresses because people are now familiar with Zoom. They like their experience with Zoom. Overall, it worked well. There weren't very many crashes in the system and so on. And so people have a good impression of Zoom now because of the role it played during the pandemic. But that's all for this video. One Cathie Wood stock that's down 87%. I think you might regret not buying it on this dip here. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.